Hello and welcome to this latest edition of Courses on Demand brought to you by Forex.Academy. So in this course, we'll be looking to discuss the topic around support and resistance, something that's a very important topic for all your technical traders out there. So just before we begin, and we'll explain exactly what we'll cover in this webinar, please take a brief moment to familiarize yourself with our disclaimer. It's just very important for you as a trader to be fully aware of the risks involved in trading these financial markets. Okay, so without further ado then, let's outline what we'll cover. We'll just start with a brief introduction to support and resistance, just explaining what it is. And then we'll delve in a little bit more detail about support levels and resistance levels and how to identify them. And then what we'll do is we'll touch upon using them in a trading environment from an application perspective. We'll have a look at the importance of historical levels. We'll identify market dynamics and that's really knowing and having an understanding about what happens at those levels of support and resistance. And then we'll look to put it all together and we'll finish with a practical live example. So we do hope you'll benefit from this webinar. Okay, so let's start with a very, very brief introduction. So support and resistance plays a very important role in the world of technical analysis for the vast majority of traders in one form or another. So it is based on the premise that historical price action will reoccur on a frighteningly frequent basis. So if we can identify these points on a price chart, which has made the market react in a certain manner previously, then it is likely to interact with that level again in quite often a similar fashion. So really welcome to the world of support and resistance. So to just touch upon what support is, this is a price which can prevent prices from moving lower. So it becomes a supportive level in the market. So if we just follow let's say that this red line on screen, it represents price. So price is moving to the downside slightly. And then if we get a reversal off the lows where prices start becoming a bit bullish and we get that little bounce, what that is likely to create is a level of support in that market. Now, on purpose, we're not bringing in time frames into the equation because the bigger the time frame, the more important that rejection of this level can become. So it's important to bear that in mind. And in addition to support levels, we also have resistance levels. So for that, I'll just move this along slightly. So what are resistance levels? So this is a price which can prevent prices from pushing higher. And so to follow this from a price action perspective, this time we could effectively see prices moving to the upside, and then all of a sudden they start reversing from this level, from the high prices, and price starts to reverse off that level. So this is typically regarded as a level of resistance. So it's preventing prices from pushing higher if we're talking about resistance, and it's preventing prices from pushing lower if we're talking about support levels. So really they are what they sound. They support the market in terms of prices, and they resist. They're levels that can resist prices from pushing higher as well. Okay, so that's just a very, very brief introduction. So when we look at support levels, so as we said, these are historical price levels which prevent prices from pushing lower, potentially on multiple occasions. So you can see these levels of support stack up on a number of occasions, not just on a one-off. So the more often the bearish prices are supported, the more important the price becomes. So if we see a level, a price level be supported on 3, 4, 5, 6 times, then it adds more importance to that price or that level of support and resistance. Also, it's worth to bear in mind that the larger the time frame, the more important the level of resistance becomes. So if you happen to be trading a 1-hour chart and you look and see those levels, they stack up on 4-hour, daily, and potentially even weekly time frames, then of course that level becomes far more important than if you were looking at a shorter term time frame support level, which they're all still valid. It's important to make that point. It's just if we assign a certain amount of importance to levels, the bigger the time frame, the more important that level becomes. Also, horizontal and diagonal lines can be used to identify support levels, and we'll look at an example very, very shortly. And just finally, the high and the low prices are obviously a very, very important prices for technical traders, but it's also worth remembering that it's also about the closing price, and that's really, really effective and more powerful in certain situations, but it must be pointed out that it does depend on the actual setup, the volatility of the market, and generally the market conditions. So to just to discuss this particular price chart over a particular period of time, we can see from top left, it's looking like it's wanting to break lower. But what we can see is, and we can use horizontal lines like this to identify, and we can see that the market has failed to close below this lower level. So what that has done is acted as a level of support in this market. We can also take note of the lows. So this low is a very, very important period on this time frame because it is quite a prolonged period of time, and we're seeing these prices attack these levels on 1, 2, 3, 4 occasions. And it's worth noting as well, when we talk about support resistance, that these markets are so large, they're so volatile from a price action perspective, that actually a few pips, for all intents and purposes, can often become fairly irrelevant when we talk about levels of support resistance. So we're going to look at a lot of charts over the course of this webinar, and please bear in mind that if there is a slight deviation between the support and resistance and the lows or the highs of the candlestick, depending on what you're looking for, as long as the difference between the low in this case and the line is relatively a small price move, I suppose when we look at and this happens to be one of the foreign exchange markets, they're so liquid that we're talking about tradable volumes in their billions. So they can move around and they can stop in a heartbeat and reverse, and to sort of take 5, 10, 15 pips into account here or there is very, very achievable, depending on where these lows sit. Now, if these lows happen to be considerably higher, like over here, for example, then that might be too much of a distance. And this is just very much a judgment call on behalf of the actual trader themselves. But we would certainly look at these charts and look at these 4 lows and suggest this is, without doubt, a level of support in this market. Prices are being supported. So unless something significant happens, like a confirmed break beneath these levels of support, then we can effectively look to do one thing, and that is to potentially buy off levels of support. Okay, so having a look as well at resistance levels in the same way. Again, these are historical price levels which prevent prices from pushing higher this time, potentially on multiple occasions. The more often the bullish prices are resisted, the more important that level becomes. Again, the larger the time frame, the more important the resistance level becomes as well. And again, we can work with and draw horizontal and diagonal lines, can be obviously used to identify these particular levels. And again, the highs and the low prices, but also the closing prices can be used depending on the actual setup. So again, looking at this chart, it's over a much bigger time frame, and when we look at this from a price action perspective, we can take note of the highs, and we can also take note of previous highs within that. And we can see how many times the market bounces off those levels over a prolonged period of time. So what we can deduce from this is that generally this level, the 0.77 to perhaps 78 level, is a major level of resistance in this market over a prolonged period of time. And the more touches we get off this and the more rebounds we get just a few pips away from that level, the more important the level becomes. So as a trader, if you can identify this level as a bit of as a useful signal, you can look to basically capitalize on. Now this one here might be perhaps potentially a non-starter, but you could look at these levels of resistance and just look to sell these markets. Now that will be a fairly straightforward, very easy to identify trading approach. Now it's always easier to identify this in hindsight. It's far more difficult to see and identify what's happening when you're at these levels. But for those traders that do look to embrace support and resistance, that's what they do on a consistent basis, is look to identify levels of resistance where the market has behaved in a repeated manner on a number of occasions. And that's normally enough. And depending on the actual setup as well of the candlestick formation and the dynamics around the level of resistance, that's often enough to assist the trader in their trading decisions. Now, some of the beauties about support and resistance is that if we look to sell this level on multiple opportunities and continue to do so as the market pushes back up to 0.77, we know we could be looking for just opportunities to keep selling this market. And if you do, you can really look to place your stop loss just above the highs. So it's really good from a risk management perspective. And potentially there's a couple of really good opportunities to sell this market. Again, it's a fairly easy approach. And all you simply can look to do from a risk management perspective is to keep that stop loss outside of this level of resistance in this situation. Okay, so let's just focus on applying support and resistance. Do focus on historical support and resistance levels to begin with. If a level has provided pivotal support or resistance in the past, these levels are likely to be important in the future. So that's really ultimately what looking to apply support and resistance is built on. Price action around these previous pivotal levels are very, very important. Japanese candlestick patterns at these pivotal levels are significant in terms of signaling a trend reversal, or potentially a trend continuation. So there is a way in which we can apply support and resistance where if the price action breaks through that level with conviction, then what that can do to traders is it can send a very, very strong and powerful signal that that level of resistance or support now no longer exists. So once you get that confirmed break through that level, it can actually become, so a support level can become a level of resistance if the support is broken, and also the level of resistance can become a support level if that level of resistance is broken. So support and resistance works both ways. So the final point there is historical support and resistance levels assist in identifying projection or targets as well. So if we know we're buying a market off a level of support and we can clearly identify resistance, maybe 100 pips higher, then we might look to take that 100 pip winner or place a take profit at the level of resistance, or it'd be preferable to be below that level of resistance slightly, just in case you get very close to it, but you decide, the market decides to turn around prior to hitting your take profit. So below resistance and above support if you're looking to place take profits. And it can be used as a target as well. So it's not just for entry, it can also be used as an exit point. So let's follow this chart then in a practical sense, and we can see that prices, this is the pound dollar chart, and we can see that prices took a major move to the downside. This candlestick here just happened to be the Brexit vote, and we got a really sizable break and it was close to the 150 level up here, and we got a very, very significant break, breaking lower. So what we can see is the market bounced back a little bit. There was a bit of resistance at these lows before ultimately moving between these two bands. And what this market created was a level of resistance preventing prices from pushing higher, but also a level of support preventing prices from pushing lower until something significant happens. So this is really what traders look for. They understand that this is a level of support, supporting prices, and every time price action comes to that level, we can see a bit of bullish price action kick in until they see what's going on inside this blue circle up on screen. And you can clearly see that this market has broken lower. So that's quite important for us as traders, because now what initially was a level of supporting prices can now become a level of resistance. So we've had the market make some lows, bounce back to this level, and as you can see, it has made a level of it's made our previous support level become a level of resistance. And again, that can provide opportunities for traders to push that lower at that point and just place your stop loss above that level. So it's really an understanding about these major levels and making fairly common sense decisions actually about their approach and when they are looking to sell this market. And it's funny how price action behaves in a very coherent manner when it comes to support and resistance. So let's follow prices on a little bit more, and we can see that the market makes a higher low. So this price over here becomes a low, and this one makes a higher low. So now that's quite an interesting development, because we can see that these lows are no longer being supported. So now we're getting this upward price action move. And as you can see now, we've actually created a diagonal line. So we can look at these lows and we can see if price keeps coming back to these levels, there could be opportunities to keep pushing this price to the upside. And you can see it happens on a few occasions before we get that confirmed break. And what we can see at this point in here is that this market has actually broken back to the upside. So what was previously a level of support that gets broken to the downside becomes resistance, can also become support once more. So you have this constant interchange between support and resistance. So we can clearly see that the resistance has been breached to the upside. You can see it's quite supportive of price on a few occasions. And lo and behold, we failed to make these new highs and we roll over. However, we still have our diagonal supporting line sitting in here. So of course, in this example, that becomes a level of support as well. So all these things can add up to provide genuine opportunities for traders to navigate. As you can see, if you can talk through this and you kind of end up reading it like a bit of a book, you can see that support resistance can play a very, very important role in being able to navigate these markets with a certain degree of consistency. Now, what's required with all of these trades is a significant amount of patience. So this just happens to be a daily time frame. This could easily be a smaller term time frame, and the same principle applies. But then when you identify new support and you can do your analysis, this is obviously a dynamic approach, so it's constantly evolving the whole time. These levels can convert from support to resistance back to support levels. So that's the dynamic nature of support and resistance levels, looking at it from an historical level. So so following another example, we can see that this is a little bit on the choppy side, but then a little bit of order starts to creep into this market, where we can see that the market tops out at those levels and starts to move to the downside, creates opportunities to both sell and buy this market, and therein lies the potential opportunities for traders. But they know that this level, this blue level here, is of huge importance to traders. And in this particular example, we do actually get a confirmed break of that level. So what becomes resistance on a number of occasions, we finally see that resistance has been broken. So what we ask ourselves as traders, and we can see this price action breaking to the upside, creating a high, and it starts to pull back. You know, what we ask ourselves is, will this level act as support? And the answer that those that apply genuine support and resistance is yes, it is very likely to provide a little bit of support coming into this market, and very likely to see that next move pushing to the upside. So again, what can become previous resistance can then alternate and become significant support, and there provides us with the potential opportunities for those that trade with support and resistance. Now, another example just to share with you is looking to identify the market dynamics at these support and resistance levels. And for this, we wanted to share a fairly unique example. This happens to be the Euro Swiss. And this level in here, this level is the 1.00 level. So that was when you would receive 1.20 Swiss francs in exchange for €1. So it was a very, very important level that the Swiss National Bank was looking to actively manage, i.e. looking to buy the market at every occasion when the price approached the 120 level, preventing prices from pushing lower. Now, this was the case up until it was actually 9 a.m. on the 15th of January, 2015. Most traders do remember it very, very well, when this floor was removed by the Swiss National Bank. So, and as you can see, prices fell sharply. And this happens to be a weekly chart, but much of this move occurred in about 15 to 20 minutes. So we had a massive devaluation, 35 to 40% devaluation in a very, very short period of time. Now look at what has happened since. We've seen a gradual increase of pricing over the last 3 years, and the prices have now recovered to return to this important, and these are the current prices at the point of this recording. So it can attract prices. So what became a very, very significant level of support can now attract prices to that level, and it's interesting to see what's going to happen around this particular level. Very likely to provide a little bit of resistance, but if we don't get the resistance that we would anticipate, i.e. these prices pushing lower, even if it's only a short-term low, if we got a confirmed break above that 120 level, then this level can become, from a dynamic market dynamic perspective, can become a level of support. So if you get that flush up to the upside and then you get the pullback, it's very likely to provide you with some fantastic opportunities to buy this market around that level, but only if the price is above the 120. And again, it can provide significant resistance below the 120. So again, you've just got options as a trader. And again, when we look at those market dynamics, we'll start to sort of put things together, and we'll start building in. When we talk about putting it together and we look at support and resistance, we can also, and what's very important, as we discussed at the very beginning of this, was to build in a basic understanding of the Japanese candlestick as well, and it can add significant value to your trade setups. So we can clearly see in this market, just following it from the top left, that this market has run into a significant reversal at that price point. So we've seen these prices bounce off that level. So it can be clearly identified as a level of resistance. So the price keeps bouncing and moving to the downside, and we can see that the market has bottomed out at this level. Now, this candlestick in itself is probably not enough to make decisions off the back of it, but the candle that we see next is. And what this does is injects a significant amount of bullish buying pressure coming into this market. We can see the rejection to the downside, and we can see it on a few other occasions as well. So you can trade this market with a certain degree of confidence that it's really struggling. We look at the closes as well. The closes are almost in line. So you can really sort of go into this trade thinking, right, well, there's clearly signs that this market is not that interested in moving lower. And then you get what's called a bullish engulfing candlestick, which is a very, very bullish piece of price action in and around a level of support. So this is a major level of support and resistance. Support preventing prices from pushing lower. So this is when you start putting it all together, and then you know that there's potentially a level of resistance back up at this level. You can draw your diagonal line just to keep prices in check, so it can conform with an extra level of support. And don't forget, when we talk about resistance, we're talking about the support levels, supporting price, i.e. pushing those prices to the upside. And the reverse is also true in a downtrend. We're looking at resistance levels preventing prices from pushing higher. So as we track this, we might think there's a fantastic opportunity to buy this market, bearing in mind we've got a level of support at these lows. We then see a couple of rejections from some previous candlesticks, and then we get our bullish engulfing. So it is about building a picture to navigate and get into these particular trades, and then applying more technical analysis to support the potential for prices to push higher until you reach that level of resistance once more. So again, you've got some decisions to make as a trader. And then what you see is a clearly defined what's called a shooting star, which is quite a bearish bit of price action. And as a result, we see these prices start rolling off the back of it. So you're putting together your knowledge of resistance levels, you're putting together your knowledge of Japanese candlesticks, and you're also applying additional technical analysis as this market unfolds, and you're building a picture. So then it can become a little bit of a no-brainer trade to start pushing prices to the downside. And again, the same thing happens. So you see prices move down to these levels of support, and you get a really nice doji candlestick, which is what this candlestick effectively means is it creates a question mark in the mind of sellers, and they look at this candlestick and think, right, well, this is potentially one of these candlesticks that can provide with some bullish price action coming into this market. It is at a level of support, so it starts to become a bit of a no-brainer to suggest if you wanted to take a trade, the higher probability trade is a buy off this low, and with a clearly defined stop loss beneath this level of support. So you're actually looking to put everything together, your understanding of support and resistance levels, also your understanding of Japanese candlesticks and how you can read this chart as it unfolds and prepare for your next trade in a very coherent, very consistent manner. And it's just looking to apply these opportunities with consistency and obviously discipline with regards to your risk exposure as well in this market. So that's just again a static chart to work with. So let's now take you over to a live chart so you can see the thinking that goes into some of these trades. So for this, I'm going to just bring across and I'm going to discuss the live current price of the pound dollar. It's a pretty good example. We can see that we've got a long-term diagonal upward ascending level of support in this market. So each time this price gets to that level, there's traders that look for opportunities to keep buying these markets as many times as they can. And as you can see on every occasion so far, it would have been a profitable trade to take, just based on our ascending or upward moving level of support. So those would have presented a couple of opportunities. What we would have seen at this level is our level of resistance at this high. So that is a level that then becomes of significant importance as we start approaching this level. So we are looking now very, very closely at this level here. So we know it's previously, so historically it's been a level of resistance. Is it likely to be a level of resistance again? The answer is always yes for us, especially on a daily time frame. So then do we get a version of our shooting star? Yes, we do. That's that's a reversal signal. So it's a very bearish setup for us. So could that provide us with an opportunity to sell at this level, have a really tight stop loss from a risk management perspective? And could it give us significant risk reward to the downside? Yes, it certainly could. So you start putting everything together and you can start to identify and see very clearly defined opportunities to either buy the market to the downside or sell it to the upside. Now, again, following this level of support, we can see that something very significant happens in and around this particular price action here. So just focusing on what's happening to price now, I'm going to take away just these three bits here. We can see we get what's called a confirmed break to the downside. So this is when traders sit up and we've had a significant reversal of a level of resistance. So that is quite bearish in itself. And then we get a confirmed break of what is a long-term level of support. So now we're no longer looking at this price action. We're no longer, and especially if you do more analysis, you can see you get continuation to the downside. So at this point, a technical trader is no longer looking for opportunities to buy this market like it had been on many, many numerous occasions. And this is why it's important as well not to get emotionally attached to any particular trade, because you want to be looking for opportunities to both buy and sell these markets. It is a unique aspect to your ability to trade CFDs. It does allow you to do that, to buy and sell. So keep that option open at all times, and don't be blindly looking to buy clearly defined and easy to see selling candlesticks. There's a lot of traders that look to buy the lows, and what we want to do and see and be a little bit patient with is identifying the clearly defined break of a long-term level of support. So then this has the potential to become resistance now. As prices push lower, you're only really looking to do one thing, and that is to continue to sell this market. So if we follow this chart to the downside, we can actually now see we've had a previous low in this market, which coincides with this level here, the 37.10. So that for us is another opportunity to look to take this market to the downside. And it's a trade we're currently in. So that is our thinking with regards to a live example there currently up on screen. And all we can use to do that is horizontal levels. If we identify diagonal levels as well, levels of support preventing prices from pushing lower. So you can do a lot of this very technically. You can use your MetaTrader 4 platform to identify these levels in these markets, and it's fairly straightforward to do so. And then you can start making some fairly straightforward, easy to identify trading decisions. But obviously, please do, and that's taken into account as well your understanding of Japanese candlesticks and these levels of support resistance. And obviously, it's quite a useful methodology to actually mitigate and limit your exposure to the downside as well. So you can use these levels for support and resistance. So if we're selling this candlestick here, you can just place your stop loss just above that high, and you can sell this market with a certain degree of confidence that this market has to work quite hard to stop you out, which it obviously can do. There is no, these markets can easily spike to the upside. However, you want to stack the odds in your favor, and support and resistance and your understanding of Japanese candlesticks and ongoing analysis can allow you to start to stack those odds in your favor. So that's just a little review, and it's important to know as well, if we look at this previous low here it is the 1st of March, we get a clearly defined break of that low, which is the 37.10, and what that is as well, from a price action perspective, is what's called a long-term double top. So we've had this market bounce back to this level, and we're back up to those levels. We get a confirmed break. So this is confirmed break number 1, just in here, and then we get a break of the lows, and this is a very, very bearish bit of price action, where what was previously a bullish market is now very, very bearish. And in actual fact, you get 3 opportunities to sell this price action. So this is obviously the first one. So what I'll do is I'll just renumber these slightly differently, just to avoid any form of confusion. So this is your first sell, this is your second sell, and this is now your third sell. And it just adds additional momentum to these trades. So I hope that makes sense. That is a live practical example. So all that's left for me to do now is to just touch upon some of the topics that we've covered on. So we've looked at support and resistance in some detail, and our ability to apply support and resistance with an understanding of identifying these historical levels, and then putting it together where we integrate our understanding of Japanese candlesticks and also ongoing technical analysis. And that can put all those things together is some of the skills that can be developed to identify what I hope you would agree would be fairly easy to identify opportunities in these markets. Okay, so that does conclude this particular webinar. So thank you very much for joining us. Do take care, and we look forward to seeing you soon. For everyone here, bye for now.